Good morning, everybody. Hey, welcome to Friday. This is the last Friday of March. Hard to believe as we head into next week will be the last week of the quarter, but not a full week. So with that, this will be the last full week of the quarter. We'll talk about where the markets ended up yesterday, where we may be going, and such as that here shortly, as soon as Dave joins us in just a few seconds. Before we do that, though, let me just remind you, there's only one thing that any of us can control, and that's how much risk you have in your current portfolio. If you don't know what that number looks like for you specifically, then you need to give us a call and walk through our core retirement design so we can help you design the retirement you always dreamed of. Give us a call at 863-382-0037. With that, we've got Dave coming up next.
Oh, time morning. 8:40 here, 20 before 9. Time to check in and find out what's doing on the Wall Street front. How's your retirement fund treating you? Well, we'll find out. Check in with Phillip Statler from Statler Financial Services in downtown Sebring. Phillip, yesterday was kind of a gradual upward run all darn day from the futures. Dow ended up 350 points up. Can't even tell there's a war on, can you?
No, you really can't. You got to try to figure all this stuff out. And it is definitely, hey, we ended up, it's really been a good week, you know, Dave, when we start looking back day past day. I think we've really only had one significantly down day this week. And so it's going to be interesting to see how we finish out this week, because this is the last full week of March, you realize.
Oh, geez, that's right. It's just the month has gone by way too fast. Yeah, yesterday the Dow was up just under 350 points. Standard & Poor's was up by 64. NASDAQ had a banner day. They were up over 1.9%, up 269 points, and that prompted me to go to my page with the Fear and Greed Index that I look at down the line, and it's been over into extreme fear ever since they started shooting at each other in the Ukraine, and it's been that way pretty much ever since the inflation took off. It's now to neutral, which is really kind of weird because absolutely nothing has changed over the past week or two, but doggone it all of a sudden investors in our world-famous short attention span in this country, it's almost like we've gotten everything and we're back to neutral as far as investor mood.
Yeah, that's right. I mean, it is, hey, you just have a couple decent weeks in the market and that, you know, your index just starts to move the right direction.
Absolutely. And since there really hasn't been anything that was unpredictable going on, I mean, Ukraine remains a human tragedy, and the loss of life is tragic, and we all agree that Vladimir Putin is an absolute turd, but that's stuff that's all now settled law for all intents and purposes, and it looks like the investor mood is just saying, well, okay, let's go on to something else now, which I'm not 100% sure is that healthy.
No, I mean, we need to realize that there's still stuff going on. And that stuff over there, even though it's across the ocean, could, and it will, not just could, it will continue to affect our economy. Just supply chain issues, our oil prices, and there's just a lot of stuff. I mean, I heard on the radio this morning coming into work that, you know, there's a lot of places in the United States that are paying over $6 a gallon for a gallon of gasoline.
Absolutely. I was whining earlier on the air about it cost me $45 to fill up my little four-banger Nissan earlier this week, and I was thinking, geez, I bought that thing so I wouldn't have to look like numbers at that again. But it's happening. And, of course, we're still accelerating up to 65 and 45 zones and whatnot, so as usual, we're just going to complain about the price and not do anything about it, right?
Well, exactly. You know, hey, nobody wants to slow down.
We are not an intelligent being. The evolutionary ladder notwithstanding, we are not an intelligent species of animal sometimes. But bottom line is we're looking at a relatively normal market picture for the moment, and the bunch of stuff going on, except, you know, it's all peripheral stuff. One thing that I've been watching that you mentioned yesterday that really hasn't hit the radar screen yet on Wall Street, we've still got that bond inversion. 5-year interest rates on federal bonds are yielding more than 10-year rates. It's only a few basis points, but the longer that lasts, it's kind of a sign as far as the yield curve is concerned.
Yeah, it is, you know, and that's concerning when the short-term interest rates are higher than the long-term interest rates. And that, you know, in that inverted yield curve, for a lot of guys that look at charts and that type of thing, it's telling them something. So it's going to be interesting to see how that plays into the stock market today and next week.
It absolutely is. Other peripheral stuff going on. We talked about this before we went on the air. There's one of the economists at BlackRock. He was saying that the war over in the Ukraine is going to have an interesting effect in legitimizing digital currencies like Bitcoin. It's now over 44,000 again, and those cryptocurrencies have always been something that you and I, we haven't belittled them per se, but both of us have kind of looked at it as something that you put your frittering money into if you do it at all. It's evidently legitimizing them, as nations like Russia that are having trouble finding dollars anywhere are kind of dipping into the Bitcoin market in an effort to come up with currency that they can actually transfer wealth one way or the other, kind of through the black market.
Yeah, you say that, and that's interesting because another headline I saw was Exxon is mining Bitcoin with excess gas.
Really?
Yeah. How you like that one?
When the heavy hitters start doing it, maybe it is going legit, huh?
Hey, it is. And it does make sense, countries like that where we start to shut them off. Well, you give them a digital currency like Bitcoin or any of the other ones, it gives them a means to bypass really all the restrictions.
It really is about the only way for a nation like Russia. The more we clamp down on the banking system over there, it's really about the only way for Russia to be able to get anything that's legal tender and accepted across borders right now. I mean, the ruble's worth absolutely nothing. They can't do dollars. They're missing bond payments that are due in dollars. Well, okay, they can always mine Bitcoin, and you can do that pretty much across borders because nobody knows where the records are at any given time for the Bitcoin accounts, and that's the beauty of it from the standpoint of people that are concerned about doing stuff under the table.
Yeah, exactly. And that's one of the issues that our government faces in trying to regulate it too, is that they're trying to control that illegal part of the activity that comes along with that.
And I think that's going to work when pigs will grow wings, I think. Speaking of stuff that you can't control and you kind of wonder why you can't, President Biden is due to be within 70 miles of the Ukrainian border. He met with all the NATO heads of state yesterday, and he kind of let a word of a food shortage slip, you read?
Well, yeah, he was at the emergency summit for the NATO, and casually, the headline that I'm reading says Biden casually says food shortage going to be real. Basically, he's saying that the restrictions that we're placing on Russia is going to cause a food shortage, and it will be real for even us here in the United States as well as Europe.
Gosh, thanks, Mr. President. I mean, the fellow that runs Ukraine, what's his name? I know it's Volodymyr is his first name. He's been saying because Ukraine is the number one wheat supplier for that part of the world, he's expecting that to be the cause of food shortages over in their neck of the woods. But when the president of the world's breadbasket, i.e. us, starts saying that, it's something that ought to make us sit up and take notice instead of just a casual mention, wouldn't you think?
I would think so. Hey, the other thing that I did see was, and this is kind of, they were playing fun at President Biden as well, is we've hit a 3-year high in mortgage rates. We talked a little bit about mortgage rates yesterday. And this article says, is Biden going to blame that on Putin as well? I thought that was kind of a little sarcasm in there.
Wait till Paulson raises the rates a full percentage point next month or something like that, and we'll come up with a way to blame Putin too, right?
Yeah, exactly.
Yeah. In case our regular listeners can't tell, it's an absolutely dead day as far as 8:30 government data dump reports. We do have pending home sales due to come out at 10 a.m. and the University of Michigan Consumer Sentiment reading also due to come out at 10. That might be a market mover simply in the absence of other market information, but there really isn't a whole heck of a lot out there. Not even reports, as a matter of fact, although a company that you're familiar with and I wasn't, did report something, didn't they?
They did. So the only company I really have showing any kind of earnings report today is the Honest Company. Now, it doesn't mean they're really, Honest is their name, but here's the deal. They're one of those, a lot of ladies probably know what they do. They have a lot of that wholesome cleaners. I know my wife gets a box every month or two from them, and it's cleaning products, masks. They just have a whole conundrum of stuff, and it's, I guess, pretty good stuff that keeps running out there. But they had a wider than expected quarterly loss. Because again, they're in the cleaning business, right? And so mask and sanitizing products, we've kind of gone through that now. And so people aren't buying as much as they were. So they've seen a big drop in that. And so that's hurt them. And then they issued guidance for the current quarter that was weaker than expected. So the poor honest company, they're getting beat up pretty bad today. They're down 18.5%. It'll actually be a new 52-week low for them at $4.92 a share.
Tell your wife to double her order next month.
Yeah.
I wonder if that's not partially, an element of a macro trend in general. Okay, granted, the line of work they're in, cleaning products, masks, and the like, probably is going to be leveling off as it is, just because the concern over COVID goes down. But okay, we've made home delivery services an established and viable business plan during the pandemic. But now that at least a percentage of us are going back to the stores more often, there's going to be a leveling effect and probably a bit of a shakeout, I suspect, in home delivery services in general over the next couple of years.
I think so. I mean, obviously, COVID was helpful for those companies that could benefit from the home delivery businesses, and other retail establishments had to catch up with them. And you're right, now that we're back going to the stores a little bit more, there's less reliability, or people are relying less on those home delivery services than they did during COVID.
Yeah, we kind of proved it's a viable business model, and that's a good thing. And there's absolutely no doubt, because people are using home delivery more than we used to. But there's got to be a shakeout in every new business plan somewhere down the line. And I think when even New York starts letting people get out without masks, you probably have that time for the shakeout in home delivery to probably take place over the next 12 months. And we'll see who the survivors are, wouldn't you think?
I think so. I mean, I'm just waiting for them to get rid of masks on airplanes.
Yeah, I understand that. Resetting the table, it was an up day yesterday on Wall Street. As a matter of fact, a doggone good up day with almost a 2% gain on NASDAQ. Looking at my delayed quotes, Phillip, I'm not seeing a lot of green ink, but I am seeing mostly green. How are we doing 45 minutes before trading begins?
Well, Dave, it is mostly green on the index side. We've got the Dow up 0.25%, the S&P 500 up 1/3, as well as the NASDAQ 100 up almost 1/3. And the Russell 2000 is right there with it, up about 1/3. So everything is in the green. On the commodity side, though, we see a lot of red. We've got silver down 1/3, gold down 1/3, and then we got crude oil heading down almost 2.7% to $109.33 a barrel.
And that is about $3-4 below where it was yesterday when we spoke. So that's good news in general, wouldn't you expect?
It is. Let me just mention this one real quick too. Natural gas is up 2.3% this morning. It's one of the higher numbers I've seen for a while, $5.52. And I think that's because there's a headline that says we're going to start helping Europe with liquefied natural gas and helping them reduce their reliance on Russian.
I was going to say that was the big news out of the NATO summit yesterday, except for the food shortage that President Biden threw out as a throwaway. He made the commitment to make up European supplies so that they could cut back from their shipments from Russia. So natural gas is going to be our next big up on prices, which I suspect for the next month or two, while they're still in heating season, will just thrill the snot out of our friends in the northern tier states.
Yep. They're getting close. They're getting close to springtime, so they won't use as much fuel.
Won't take too long. Guys, deal with it. Overseas markets, it's a mixed bag pretty much on both rims. The Asian rim market was really quite mixed. Hong Kong was off substantially at the close. The other ones kind of frittered around the zero mark. Europe is also mixed. France, after a big up day yesterday, is having a down day yesterday, both a down day today. England and Germany are both kind of up, but fractionally again. Not a lot of movement that you can figure a trend out at all from. Establishing some sort of level of comfort with one's retirement account is kind of hard when you don't know what's going on. And the problem is, Nobody knows what's going on. The only thing you can control is risk. How do I find you, Phillip, to get that out of my portfolio?
Dave, give us a call at 863-382-0037. Let's walk through and find out how much risk you do have and make sure it measures up with what you need. Again, that number is 863-382-0037. Join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 730 and 95.3 FM.
And back here together again on Monday morning, same time on Light FM. Phillip, thank you so much. You have a great weekend.
All right, man. You too.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. This is your captain speaking.
Hey, folks, I want to thank you for joining us today. I hope your week has gone well. Hope you have a great weekend. And I look forward to speaking to you again on Monday. Until then, great times.